Nobody warns you about the part where you finally launch your business, feel like a genius for about 45 seconds, and then get handed a bill that makes your stomach drop. We're talking about the silent killers of year one: legal fees, payroll costs, and accounting expenses, the ones that don't show up in any entrepreneurship highlight reel. You did the math on your product, your marketing, maybe even your rent, but most first-time business owners completely forget to budget for the infrastructure that keeps them out of jail and out of court. Think of it like building a house and forgetting to budget for plumbing. Everything looks great until something backs up. The average small business owner spends somewhere between $3,000 and $10,000 just on legal fees in year one. And that's if nothing goes wrong. We're talking entity formation, contracts, maybe an employment agreement, or too boring stuff that becomes extremely exciting the moment you skip it. Then payroll walks in the room and suddenly you realize your employee's salary is not the only number you're writing a check for. Employers pay an additional 7.65% on top of wages just for FICA taxes alone, plus unemployment insurance, workers' comp, and potentially benefits, and that's before you've even bought the office coffee. Payroll software can run you anywhere from $20 to $200 a month, depending on your headcount. And if you outsource it entirely to a firm, you could be looking at $1,500 to $4,000 a year. And before you laugh that off, remember that payroll errors trigger IRS audits faster than almost anything else. Accounting is the one everyone thinks they can DIY until April 15th arrives, and they're sitting in a pile of receipts like a very stressed raccoon. A decent bookkeeper runs anywhere from $200 to $800 a month, and a CPA for year-end filing can add another $1,000 to $5,000 on top of that. Here's the thing nobody tells you. The cost of not having these systems in place is exponentially higher than the cost of having them. One misclassified contractor, one missed quarterly estimated tax payment, one unsigned client contract, and you're writing checks to lawyers and the IRS that make your original budget look like a rounding error. People think these are optional expenses, the kind you layer in once revenue starts rolling. But that mindset is exactly how businesses bleed out quietly in year one. The irony is that the businesses that cut corners on compliance are often the ones spending the most money trying to undo the mess later. Historically, the businesses that survive past year three almost universally invested in professional infrastructure early, not because they were flush with cash, but because they understood that clarity and protection are competitive advantages. Warren Buffett didn't build Berkshire Hathaway on a handshake, and a prayer structure is the strategy. The practical move here is to set aside between 8 and 15% of your projected year one revenue, specifically for legal, payroll, and accounting non-negotiable, off the top, before you spend a single dollar on branding or Instagram ads. Think of it less as an expense and more as the insurance policy on everything else you're building. You don't have to hire a full-time CFO out of the gate. There are fractional accountants, online legal platforms like Clerky or Stripe Atlas, and cloud payroll tools that make this accessible even on a tight budget. The goal is not perfection, it's protection. And you can scale the sophistication of your systems as your revenue grows. The misconception we need to put to bed right now is that only big companies need this stuff wrong, completely wrong, dangerously wrong. The IRS does not grade on a curve for small businesses, and a verbal agreement holds up in court about as well as a wet paper bag. Discipline here looks like this. Before you hire your first employee, talk to a CPA. Before you sign your first client, have a lawyer draft or at least review your contract. Before you miss your first quarterly tax deadline, set up estimated payments. It's not glamorous, but glamour doesn't keep you solvent. At the end of the day, the businesses that win aren't always the ones with the best product or the boldest vision. They're the ones who treated the back office like a frontline investment from day one. Consistency in your compliance and clarity in your financials compound just like interest, quietly and powerfully. Whether you're just getting started or already knee-deep in year one trying to reverse engineer the chaos, we can help. Check out our links in the description below for resources on real estate investing, home contracting work, and finding the right lenders to get your foundation built right.